Monday, September 30th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning, I want to talk about gold and why you should look at gold and silver for that matter as money and as insurance and not as trading vehicles. We just seen an article from King World News published this weekend talking about alert, bullion banks and commercials all-time record short the gold market. What does that mean? All-time record short the gold market. That is actually not the physical gold market, of course. That's the paper market, the COMEX futures market. How can they be record shorts? Have they got all the gold to short it? Technically, they do. How do they do that? Well, by leasing the gold from the central banks. For example, Bank of England, through the LBMA, the organization who recently had someone on the board who's been criminally indicted, right, by the Department of Justice. Through the LBMA, the Bank of England leases, let's say, a ton of gold to JP Morgan. JP Morgan uses that ton of gold to actually sell let's say 50 or even 100 tons of futures in the market, and that drives the prices lower. Many of you, of course, are discouraged by this. Many of you say gold, or have been saying in the past, when gold is at 1,200 or 1,300, gold will never go up because the bullion banks can keep shorting the market. And that's partly true, but here we are around 1,500. And they're record short. If they were able to always control the market through their short shenanigans, we wouldn't be at 1,500. So what I'm trying to say is that the bankers and the central bankers know that there is a limit to how much artificially or fraudulently they can short the paper market, because there will always be people out there who will take that as a opportunity, as a bargain to accumulate physical gold and silver. And that's what you should do. You should not be discouraged by these moves. You should ignore the talk in financial TV, CNBC, Bloomberg, MSNBC, what they say about gold. These people have no idea what gold really is. That gold is actually at the tip of the inverted pyramid of the whole financial system, as John Exter once said. And you need to have that in the times we are in these unprecedented times of negative yields, negative interest rates, collapsing bond yields. You need to have precious metals. The banking system is fragile. We've seen recently all the trouble in the repo market, right? So that's what I'm trying to say. View gold more as a currency, and that's what it is. Worry about how many grams of gold you've got or how many ounces of silver you've got. Forget about the fiat price, which is very volatile. And that's what, in my opinion, is one of the purposes of the futures market and the bullion banks, is to keep Joe Public away from that market, to give Joe Public the perception that gold is risky and it's just a commodity, right? But it's not. Why would the major central banks of the world, major governments of the world still hold about just over 30,000 tons of gold? Well, because it's the most important money, right? And so is silver to some extent, even though silver is also industrial commodity, even more important than gold industrially. Gold doesn't have too many uses because gold is really money. It has no other use except to be money. Yes, there's jewelry, but that jewelry can always be converted into money very easily, right? Cash for gold, scrap gold. So that's what I wanted to talk about. Yeah, I'll put a link to the article below on King World News. The last time the commercials were so short the gold market was back in 2016 when gold reached 1375. So we did correct then. Are we going to correct again? Yeah, we could. So with that, I'll go to the markets right now. It's 7:30 a.m. London. Gold last night I saw on the open. Last night for me, it was around 6 p.m. New York. That's when COMEX opens on the Sunday. Gold got up to 1500 actually, but now we're at 1489. The low's been 1488. I've spoken about the 1483 level. I think that's where they want to drive this market, because if we break through 1480, 1483, I think we could see the commercials drive even more of the longs away. They'll have to, I think that will be a key level. That's where the stops are going to be. That's probably where these bullion banks are going to try to spoof the futures market again. Yes, they're cracking down on people spoofing the markets, but don't be fooled into thinking that they're not. They haven't kept doing it. Spoofing anyway. Right now, spoofing is done electronically, right? But I remember the day when the COMEX, because I worked in the futures market and I did trade some gold for clients, futures, not that much. I used to hear from the brokers on the floor, JP Morgan just offered 1,000 lots. And a lot of times just offering the 1,000 lots in the pit would drive the market lower, and they just pull the offer. That was kind of spoofing, but nowadays it can be done a lot quicker electronically. Back then you had to have a trader do it, and then the guy in the booth would tell the trader to take the offer out. But that's how they used to do it, and it's easier to do it electronically, and people don't know who is doing the spoofing, even though they have found out, and a lot of people have been punished for it. So yeah, so right now we're down about 7. The low has been 1488, so we're near the low. The high's been just above 1500. Silver is testing a key level here, in my opinion, 1730. That's where we are right now. It's down 24 or 1.4%. I would say that these bullion banks, JP Morgan and company, are selling the paper. Why are they involved in precious metals? Are jewelers that huge? Do they have to short so much for jewelers and miners? No, it's because they're trying to manage the most important money in the world. The money that is a barometer for their crappy fiat central bank paper, right? It's to pretend that all this money printing and QE that they're doing won't have any consequences, but it will. Believe me, it will, because if money printing, QE, fiscal spending, monetizing debt, because that's what they're doing, is never made any country wealthy. If it did, Zimbabwe, Brazil, all other countries that have done that experiment, they would be really rich now, wouldn't they? They wouldn't have had 4, 5, or 6 different currencies in the last 50 years. So stay the course. Don't worry about what's going on unless you are a trader in paper, but that's completely different, right? So over the weekend, we've seen a few comments as it relates to the trade deal with the Chinese. They've come out and said, the Americans, that they're not going to stop Chinese companies from listing. It's just a joke. One day is something, and then they backtrack. Don't forget, I think this is just more. It's more than a trade deal. It's not going to end well. I think the Americans want the Chinese not only to change their behavior in trade, but the way they manage their economy. I don't think there's a chance in hell that the Chinese are going to be subservient to the Americans. They're going to do as they want, right? But so right now the Dow is up 100 points because of what we've heard about trade over the weekend. But I need to tell you that the trade deal was supposed to have been reached on March 1st this year. So almost 6 months now, more than 6 months now. And I don't think it's going to be reached anytime soon. So yeah, so we're at 26,923, up just over a third. The S&P is at 2975, up 12, or just under 0.5%. NASDAQ 100 future is up 43, 0.5% as well, 77.25. What about the fiat currencies right now? Well, sterling is up slightly at 122.97, less than 0.1%. The euro is unchanged at 109.40. The dollar is down 0.1% against the yen, 107.80. The dollar is down also 0.1 versus the yuan at 712.73. Crude oil 55.80 WTI. Brent is at 60.93, down about 0.25%. Let's finish off with the bond market. The 10-year yield right now is up 2.5 basis points at 170. So we're pretty much in the middle of the range that we've seen for the month in yields. We've seen a low of around 143 and a high of 190. So very volatile and wide range for the 10-year bond yield. So we're at 170, the 2 years at 165. So the curve has disinverted the last few weeks. It is upward sloping a little bit, 5 basis points. Let's keep an eye on the repo. Let's not forget the repo, even though towards the end of the week, it seems like things calm down in the repo market. But I don't think we're out of the woods yet. Yeah, we're going into October, that month where we've had quite a few disasters in the stock market. 1929, 1987, right? 2008 was September, October time. Not a great season for the markets. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. Make sure you also hit that little notification bell above to be notified of all my new videos. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.